Laura Martin. Laura, would you be telling your clients to build positions here after some of these mega cap growth stocks got beaten up so hard?
So the answer is I would pay attention to the fact that the divergence in the FANGs is getting more extreme. So over the last week, you saw Alphabet down 6%, Netflix up 13%. And over the last month, you had stocks with a 10% range. So I think Meta's catching up a little bit. I would not be a buyer of Meta here. But I do like the idea of Amazon because and I'd be cautious about Apple also because of the China risk, because of what's going on in the Ukraine with Russia.
You didn't mention Netflix. You've never liked Netflix. I know it's been one of your big misses over the years, but you've continued to do some new research and have looked at this idea that people are more focused on the news right now, given the war in Ukraine, than entertainment. Do you see that as a lasting phenomenon and issue for Netflix?
I do. I think Netflix, I think we're in the 7th inning of the streaming wars. It's clear you just read my most recent piece. And Netflix is losing. It's losing to competitors with bundles. It's losing to competitors with cheaper price ad light tiers. And it's not doing anything innovative. It created a business 12 years ago. They deserve kudos for that. And it has done nothing innovative since. So I think it's losing the streaming wars. We're back to the price where we downgraded in the fourth quarter of 19. I would call that an okay call, even though I missed a couple of years during COVID of awesome Netflix results.
They're still the first mover. They're still the dominant player. And they've still got a lot of international growth. And these are the arguments the bulls use. I'm sure you've heard them.
I have. I just think they need to be more reactive to their competition because now we're in maturity. Now it's about targeting audiences and it's not just about having better entertainment content. You need sports and you need news and you need a cheaper tier that's $5, not the premium price point of $17, which is where Netflix is.
Mike, what happened this week to the mantra that the Fed is raising interest rates, they're going to keep hiking to fight inflation, and that makes long-duration risk assets like tech stocks vulnerable? It totally flipped this week after we got that message from the Fed. It just was priced in?
Well, first of all, if you buy into that being the key driver, and I haven't really bought it, and I think that's an element of what's going on, what most matters is longer-term rates. If you're talking about duration, then you look at the longer-term yields. They have not been really where the upside has been this week. You have the 10-year kind of stalled out just above 2, and, it's in a manageable range. And when you have the overall NASDAQ 100 losing 20% of its value in 2.5 months, then you're talking about things matter a lot more than a few basis points on the 10-year yield. And arguably, it's sort of a mean reversion relative value trade just to get back into some of those big index stocks as opposed to really trading tick for tick with bonds.
NASDAQ Composite up 2%, 8% for the week. Laura Martin. Laura, thank you.